Hello everyone, today I'm going to present on the presentation on the accounting and business. Myself, Savita Dawadi. Let's start. Accounting. Let's talk about the accounting. It is the process of identifying and recording, analyzing, and sharing other financial information about the business and cooperation. This is the citation. And according to the accounting is also known as a language of business because it communicates the data which help in organization to make better decisions. This is the citation on importance. Let's talk about the importance of accounting. It help in keep a record of the business transaction, and it is it also help in the financial decision for the management and communication and also it help in the communication result and it also accounting also used in the meet legal requirement also for the financial document. Journal. Let's talk about the journal entry. A journal entry is a record of the business transaction of your business book, which is it is also known as the double entry bookkeeping, and you make at least the two journal entry for the every transaction, which is basically entry keeping system is used in the business and prepare for the preparation journal entry and the account for the following transaction. Also prepare the trial as a March 31 20 into 2 March 1st. Mr. Deepak and Mr. Samip business started bringing capital as RS 1 lakh each, and March 5 mm, rupees 2 lakh is deposited into the bank. Let's make journal entry. First, journal entry March 1st cash account is always the debit, that is 2 lakh, and for the credit to capital account it is balance 2 lakh being capital rise, it is reason is being capitalized. And March 5 for the bank account it is the debit 2 lakh to, and for the that credit is to cash account, that is 2 lakh. It is reason behind is being the cash deposit to the bank. Let's talk about the ledger. Ledger is a posting of journal entry, and it is also known as a TA account and visual presentation of the journal entry recorded in the general ledger account, and it is a T format graphically deposit the deposit on the left side of the T and the credit on the right side. Let's talk about the T account ledger. And I already told that debit first come is debit, that is to capital account is 2 lakh, and for the credit that being by capital account 2 lakh, and total is 2 lakh. This is balance. And for the journal entry of capital account, debit is for the debit to balance 2 lakh and credit by cash 2 lakh, and that is balance. That is the cash account journal, and this is the capital journal. Let's talk about a trial balance. A trial balance, it is a list of the credit entry and debit entry that is business used to be instantly audit for a double entry. I already told an accounting system. It is the goal is to form that the sum of all the debit equals the sum of the all credit and identify whether an entry have been recorded in a wrong account or it is written as mistakenly, or it is mistakenly happen. For that, trial balance is look for that. And let's talk, try balance is also used for the preparation of the balance sheet and other financial statement, which is the important for the document auditor also. And it is also make for to check the debit and the credit column of the total of the general ledgers and accounting, which is the March each year, which has the spot by accounting error. And let's talk about the how the trial balance is. First of all, there is the particular, that is debit and credit. And for the cash account debit is 2 lakh, and capital account for the debit. And no, for the capital account for credit, capital is always credit and cash is always the debit, because um, uh, what going on expenses, that is the debit, and what we return income, that is the credit. That's why the capital account is credit 2 lakh and total is debit account 2 lakh and credit account 2 lakh. Let's talk about the income statement. An income statement is also as a company which is recorded as a review expenses and profitable over the period of time. In it is also sometime called as a profit and loss account statement, which is earning statement. And it review from the selling product or services expenses to generate revenue and manage your business. It is generally used in the mainly used in the bank and the company for the current and previous year for the looking the statement. So for that, that is the general that entry of the income statement. First of all, particular and current year and previous year. First of all, we have to return the review of the current and previous year, that is the total revenue. And for that revenue, for revenue and total revenue, that is and then come as expenses, then total expenses, and and for that next come at the net income before the tax, which will be added for the entry of the income statement, and then the income tax, and then after the net income after the tax. First of all come before the tax, then after come after the tax of income tax. Let's talk about the return earning. Return earning is also as the profit of a company, because as we this in title already written as a return. Return means that is profit. Yes, we all know that. And return earning is the amount of the profit of company, and it has over the left and paying all the debit cost and indirect cost income of the taxes of the dividend to the shareholder, and it is act as the rise between uh, rise between income statement and the balance sheet. This is the entry for the return earning. Opening balance for return earning. First of all, we have to add the profit of the year, and then we have to less the dividend, and after that we have to close the balance return earning. Then let's talk about the balance sheet. Yes, balancing about the um about the statement of the business assets, liability, and honor equity over a given data. And typically, balance is prepared at the end of the set period. For example, for the quartile, annually, no, you know that. And first, to make this entry, we have to make particular particular, there will always the particular in debit, left and right side credit. Particular amount, left side, that is assessed, and right side is liability, which is assessed and liability become equal, then that is the balance. And for that, the balance sheet particular, this is the entry for that particular. First of all, we have to write particular amount, and then current assessed, total current assessed, and we have to total current assessed, and then property, plant and equipment, we have to less the depreciation on that, and investment, amortization expenses and other intangible assets, then we have to grant the total of the assets. And for the liability side, this is the liability entry. First of all, we have to write upper side the liability, then current liability to current liability, and then we have to total the current liability, and then medium and large loan, and we have to total the medium and long term loan, and then capital and reserve fund, and we have to total the capital and reserve fund, then we have to grand total of capital and liability. This is the reference. Thank you.